This is Matthew Kratter from Trady University, and today I want to talk about how Bitcoin is going to make housing affordable again. This is inspired by a comment from Adriel, I believe it is. Hey Matt, thanks for today's video. I have a question. Supposing that the existing bonds, stocks, and real estate speculation will, at least partially, move towards Bitcoin, do you think that would make housing more affordable? Just to give an example, my grandparents didn't finish elementary school and were able to buy a house, while for my generation it's much more difficult even with college degrees, etc. And so I think the answer to this is yes. And in order to explain that, we need to backtrack a little bit. Why is it that wealthy people often own multiple homes or real estate properties or rental properties? A lot of it, of course, is consumption, pleasure, status signaling. You got to have that house in Miami Beach and that house in Aspen and that house in Hawaii, etc. There's also tax arbitrage as well. You have to have that house in Wyoming, so if you're a Hollywood celebrity, so you can pretend that you live there and pay taxes there, which are 0% state income tax. But I would say most importantly, a lot of wealthy people invest in either luxury houses or real estate rental portfolios for the yield and for the capital appreciation. And I should know about these things because I personally used to own a portfolio of houses in the Sacramento area in California. I bought these properties beginning in 2011 to put to work some idle cash that I had that was earning close to 0% in the bank. And just to give you an idea what the yield spread was, I was buying houses with a gross yield of 10 to 12%. These were foreclosures, obviously. And they had a net yield after maintenance and property taxes and a property management company of approximately 8 to 10%. So this was really made it quite worth it compared to earning 0% in a savings account and closer to 1% on T-bills or other treasuries. I actually talk about this experience and more real estate investing ideas in my paid course, which you should not buy. You should buy Bitcoin instead. But this paid course is still up as sort of a legacy course on my website. If you're interested in real estate, you can buy it, but I think buying Bitcoin at 24,000 is probably a much better idea. So buying houses in Sacramento was my play on buying the bottom of the biggest housing bubble implosion since the 1930s in the US, but it was also, as I said, a direct result of Fed interest rate manipulation. If I'd been able to get at least even 3% on T-bills, I might not have done it because it was a bit of a headache, all the groundwork to get it going. And then I passed everything off to property management companies, so it was fairly easy at that point. Side note, 2011, when I bought most of these properties, was actually the first year that I also heard about Bitcoin from a friend. And I've shared this on this channel before, but I told my friend that I could allocate $10,000 toward Bitcoin because I didn't really understand what it was. That was when Bitcoin was trading at approximately $1 per Bitcoin. So I would have ended up with 10,000 Bitcoin. I probably would not have been able to hold on to it. But what I told my friend was I'm not going to do it because that probably wouldn't move the needle too much on my finances. Obviously, that amount of Bitcoin, 10,000 Bitcoin, is now worth close to 240 million today. So it definitely would have moved the needle a lot if I'd been able to hold onto it. So let that be a lesson in humility. I think if I hadn't had a finance background, I probably would have done it, but I was too smart for Bitcoin. And like many people in finance, I paid the price for that. And we all get the price for Bitcoin that we deserve, as the saying is. Our money, our fiat money, the US dollar and other fiat currencies is so bad that you cannot store your savings in physical cash or in digital cash. This is true for the US dollar, it's true for the Swiss franc, and it's true for all lesser fiat currencies. So what wealthy investors do, as I said, is they seek out real estate in addition to the normal mix of stocks and bonds. And what this means is that you end up having a lot of houses that are empty or only lightly used. For example, in China, people like to buy second houses as a savings account. A lot of this comes from distrust of the banking system in China. And part of the tradition there is not renting them out, keeping them clean and perfect. If you're enjoying this video so far, I just ask you to hit the like button, hit the subscribe button, and leave a comment. And this Chinese tradition is carried over to Vancouver. For the past 30 or so years, there's been a lot of Chinese money coming over from China as people seek to exit, and they move their money into Vancouver, British Columbia real estate. That arbitrage is slowly coming to an end as Vancouver has set up a 3% property tax on empty homes. They're calling it the empty homes tax. But this is a pattern, and it's partially just driven by people, wealthy people in other countries trying to bring their capital to the US. And there's a lot less KYC, AML restrictions for the most part buying real estate in the US. And so you have not just Chinese oligarchs, but Russian oligarchs buying property in Manhattan, wealthy Chinese buyers buying apartments in Manhattan as well. And then, as we highlighted a couple years ago, we have companies like BlackRock and other large finance companies buying up portfolios of single-family homes, and this created a lot of distortions. It looks like this ended up being a fairly bad bet for companies like Zillow and Redfin and BlackRock, and they may end up losing money on their portfolios, but this created some very bad dynamics for first-time home buyers and people who just wanted to buy a house in the US to have a roof over their heads, and they were competing with investors in these funds that were snapping up these houses, and in many cases overpaying by 10, 20, 50% over the listed price. So how does Bitcoin fix this? Well, Bitcoin is a better store of value than real estate for many, many different reasons. It's more scarce than real estate. It's more portable than real estate, which is obviously not portable at all. You can hold $10 worth of Bitcoin. You can't really hold $10 worth of real estate, or even $10,000 worth of real estate, at least in the US. It wouldn't make sense. You can also hold $10 million worth of Bitcoin or $10 billion worth of Bitcoin. And unlike properties, unlike real estate and housing, you don't currently, at least in the US, you don't currently pay any property taxes on Bitcoin. If a jurisdiction starts to tax your Bitcoin, what you do is you just move to another more friendly jurisdiction. And so there's this arbitrage between different jurisdictions that's not really possible to the same extent with real estate, because for real estate to move it, you obviously need to convert it to fiat and then buy the real estate in another country. So this is much easier than moving your house or commercial real estate. And I forgot to mention that obviously a lot of wealthy investors like to invest in commercial real estate and apartment buildings and even skyscrapers, for example. Now, Bitcoin doesn't require ongoing maintenance costs like real estate. And as we said, Bitcoin cannot be seized by governments like the US or the UK government, for example, seizing real estate held by Russian or Chinese oligarchs. And you don't have to be an oligarch, you don't have to be highly political, but someday the day may come when your government decides that they don't like you for some reason because you're saying something on the internet that is contradicting the official policy, etc. So you never know when it can happen. It can happen really to anyone. You can have your assets seized, even in a place like the US. So what's going to happen as we move towards a Bitcoin standard? What's going to happen is savings and capital are going to get sucked out of bonds and stocks and even gold and real estate. And this is what happened in my personal portfolio. So for example, in December of 2020, I sold my remaining rental houses and I bought Bitcoin with the proceeds, and I've been hodling that Bitcoin ever since. And as more and more investors do this, what's going to happen is real estate as an investment is going to be demonetized. It's going to lose its monetary premium, and it's going to revert to its utility value, because obviously real estate does have strong utility value. And I'm not saying necessarily that you should rent instead of owning. It's very nice to own your own land, even though own your own house and land, even though you never really own it because the government can seize it from you. But it's much nicer than having to deal with a landlord if you're able to do this. And I think more and more people will be able to own their own homes as real estate as an investment becomes demonetized. It will no longer be a very smart place to park excess capital. Instead, people will choose to park that in Bitcoin. And I don't think this is going to happen next year, but it can certainly happen over the next 5 to 10 years. And what this will do is this will free up both regular and luxury houses that are not being lived in or that are not strictly necessary. I had this portfolio of rental homes that was paying me a yield, and I chose instead to put that into Bitcoin. As a result, as people move out of real estate as a monetary asset, they will move into Bitcoin, they will sell their houses, and housing will become more affordable for everyone as it stops being a piggy bank for the rich. Bitcoin will also hopefully put an end to the Fed and other central banks, which have been largely responsible for a lot of pain, for a lot of giant housing booms and busts. And the Fed really runs from one side of the boat to the other, from deflation to inflation. And their policy has really been quite irresponsible over the past 20 years. So for example, there was a conscious decision made to inflate the US housing bubble. This was actually a suggestion made by Paul Krugman in the New York Times. and regulators and central bankers took him up on it. They inflated a US housing bubble to try to bail out the economy after the imploding of the dot-com bubble and the stock market bubble of 1995 to 2000. And this created a lot of pain. It created another huge bubble. And then we had a lot of people's lives were hurt by the ensuing collapse. When we put an end to the Fed and central banks, the time value of money is going to be decided by the free market, not by a panel of investment bankers and lawyers, people like Jerome Powell. I think that also leverage will come out of the real estate market as we move from an economy based on debt and borrowing, which is really what fiat is, to an economy based on sound money. What's the bonus for current Bitcoiners? When you own Bitcoin for a while, you'll begin to notice that everything around you starts to become more and more affordable, including things like cars and houses. And I prepared a chart here. This is the median sales price of houses sold in the US by year 2016 to the present, and I've normalized it for the price of Bitcoin. And we can see that US housing prices continue to move lower over long periods of time as Bitcoin appreciates. And we can even see this happening over the past 5 years. Houses become cheaper and cheaper when you are holding Bitcoin. And so if you're thinking of buying a house eventually, I think this is not investment advice, of course, or tax advice, of course. You should consult a financial advisor for that. But I think it makes a lot of sense to save in Bitcoin, and then at some point you can use that to buy a house, either by borrowing against the Bitcoin or by selling it and paying taxes and investing it to buy a house or land of your own to help you become more self-sufficient. If you found this video helpful, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.